I turned a $200 loss into $2,000 profit with the exact same setup. On the 5-minute chart, I bought gold. 15 minutes later, I took a $200 loss. But the trade did not hit my stop loss. I simply learned how to cut my losses short. But first, let me take you back to how it all started. As traders, I know a lot of people talk about supply and demand, and that's good because today we are diving deep into the heart of price action with that very powerful concept, supply and demand. Now, the explanations that I always drop on this channel are the most simple yet very powerful explanations when it comes to price action and trading with candlesticks that you can ever get on any channel of your choice. So it'll be good to stick around so that you can get one or two things that you can use when you're trading by your own self. Now, first, let us imagine the market like a tug of war, right? A giant tug of war. On one side, you've got the buyers, and these buyers, they are eager to push the prices higher. Then, of course, on the other side, you have the sellers, and then these ones want to push the prices lower. Very simple. Now, where these battles rage, neither side can get an upper hand, and then you find a zone of congestion. These are going to be our sweet spots. That's why we want to talk about supply and demand. Now, let's start with the demand zones, right? These are the floors. Prices, they repeatedly bounce off of these areas, right? And then they're trying to find support. Why is that? This is simply because the market sees those areas as if they're very cheap. And then here we have sellers covering their short positions, and then the buyers stepping in to buy the market when it's cheap, right? And then you now start to see the price climbing up. Then we have the supply zones. Now you can think of these ones as the ceiling. Price repeatedly slam into these areas and they are unable to break. Why? Because the market deems these prices as very expensive, and the buyers are not willing to keep pushing the price higher. They're not willing to buy at an expensive price. And then the buyers, they start to bail out of the market, and then the sellers now start stepping in, and then guess what? The price pushes right back down. Now, using that very simple concept that I just explained, that is what I am looking at right now on my chart. As you can see, a demand zone. Let's zoom in to the 1 minute time frame to get a clearer picture. Look at this. We've got a beautiful bullish engulfing candle right here on the 1 minute. What is a bullish engulfing candlestick? This is just a 2 candlestick pattern that will show us a shift in the momentum, right? In this case, a bullish momentum because it's a bullish engulfing candle. The first candle is a small bearish candle that we have here, and then the second candle is a large bullish candlestick, right? This engulfing action suggests that the buying pressure has increased in the market and the sellers have just been overwhelmed at this level, right? And just by looking at this, it signals a potential push to the upside, right? Now, how can I use this information when I am trading, right? I want to use this candlestick as a confirmation candle because it is at a spot that I consider as a point of interest. So that'll be you looking at the market either at a support zone or at a demand zone, right? So I use it as a confirmation candle. Now, a bullish engulfing candlestick confirmation is really powerful and it's one of my favorite, right? And then I also try and use it sometimes as an entry signal, and sometimes I always use it as a stop loss. In case you're on a sell, you see a bullish engulfing stepping in, it might want to tell you that the buyers are starting to step in, you know, into this market. Or when you see a bullish engulfing, you're looking for an entry position, it's telling you that the buyers have stepped into this market right now. While the bullish engulfing candlestick is a strong candlestick, it is very important to always understand and use other factors. Now, for me, I like to wait for the 5 minute time frame to give me another bullish confirmation. As you can see here, we got a bullish doji on the 5 minute candle, and I want to use that as an entry trigger. Right now, what is an entry trigger? Right, this is just a specific condition that signals you that the trade is ready. It's like, you know, a go signal, like go into the trade, go in and buy, go in and sell. In this case, my entry trigger here is the appearance of this bullish doji on the 5 minute candle. Remember, I have a bullish engulfing on the 1 minute time frame, and this provides me with additional confirmation that the bullish momentum has increased, and now my confidence in the trade is a little bit, you know, right up there, right? So now I want to place my stop loss at this level because I am willing to lose only $150 per trade. As you can see, we're just trading an $808, almost $900 account here. I can lose $300. I am willing to take that loss, and now I'm just going to enter 2 trades. All right, and then my take profits are going to be here according to all the necessary levels. So that's it. We're just going to let the trade run and then come back and check it out later. Alright guys, 15 minutes later and the market has broken out of our setup. We are in drawdown here and I am thinking of closing my trades. Now, what is breaking off a set up. Now, a break of a setup is very simple. It's just when the market moves against your initial assumption of the trade. It's invalidating each and every signal that led you to enter that trade. In this case, you can clearly see that the market has broken below this bullish engulfing candle on the 1 minute time frame. It has broken below the 5 minute doji candle, and it's showing signs of strong selling pressure. In this case, I just don't like the little, candlestick that has closed. It could have dropped and wicked right back. Just the fact that it has closed outside, I really don't like that. Now I have to close the trades. I won't wait for the trade to hit my stop loss, because I think it will keep dropping. It might even go to hit my stop loss and keep going further than that, right? As a trader, you should learn to cut your losses short, which is what I'm going to do right here. And now we have $180 loss. We're going to take a deep breath. No need to panic, right? This is part of the game. Remember, even the best traders take losses sometimes, right? We're going to take a step back. We're going to relax. Sometimes a little, view from the outside can help us to come back and make better decisions, right? So maybe the market is just taking a breather, before continuing its upward movement, or perhaps it's time to recess. It wants to drop, maybe it's time to rethink our initial assumptions here and look for new opportunities. We're going to just stay calm, analyze the situation, and then that's how we grow as traders, right? So that's it. Let's wait for just, I think, an hour or so. We come back, we check the chart and see what we got. All right, guys, we were meant to take a short break, but we end up taking 3 hours. This is like 3 hours later. I just came back to check the chart, and just like that, you can clearly see that gold has shot up to the top. It almost, hit my stop loss just a little bit, but you know what? It's a good thing that I left the trade. Clearly, my initial setup was broken at that particular time. Where I placed my stop loss was good, but sometimes you just need to be able to read the market, recognize that your initial setup has been broken, right? It's no longer valid. Now, instead of waiting for your stop loss to get hit, you just leave the market because it's not necessary. You end up just taking unnecessary losses. In this case, I cut my losses short, and very interesting enough, the market actually came close to my stop loss, but it did not hit the stop loss. Talk about a close call, right? In this case, if it had hit my stop loss, it would have been really bad because I would have lost like $300. I just lost $180. So what's next right now? Now the market has reversed and is heading towards the supply zone. Now remember, we initially were looking for a bullish move within the demand zone at the bottom. Right now we're looking for a potential breakout of the supply zone. Since we are in an uptrend, and a successful breakout of the supply zone could signal a continued push, to the upside, I'm going to wait for a clear signal, such as a bullish engulfing. Remember, we spoke about that. If it breaks through with a really big momentum candle, I am going to take that as my next buying signal, right? And all right, guys, I've been patiently waiting for about an hour and a half, and look, we've finally broken out of the supply zone, and that initial trade could have been incredibly profitable, right, if we held it from the demand zone all the way to this breakout. But hey, we don't cry over spilt milk. This is trading, and as you can see right now, we have a strong bullish momentum candle forming. This is my buying signal, right? Remember, entry triggers, that's what we want to use here. The buyers have broken out of the supply zone. They are demonstrating that they are willing to buy the prices higher, and I am going to join the trade right now. My stop loss is going to be placed right at this level where the market broke out of the zone. And also notice we have soaked up all the liquidity that we had, so it's a logical place also to place my stop loss at this level. Here I'm now just willing to risk $100 per trade, not more than that, right? I can't lose $500 in a day, or even $400 in a day, so I'll be risking $100 a trade, and then if it goes against, then we just relax for the day, right? So that's it. Let's see. Remember, our account is still down minus 180 from the previous trade. Let's see how much we can recover from this new entry, and let's ride the move. Let's see where it can take us. Okay, guys, so it is the next day, and look at this. Gold just kept shooting up to the top. Now we are holding over $1,500 in profit. Remember that little minus $180 that we had from yesterday? It is actually nothing compared to this, and each of our trades currently showing a profit of over 500, well, almost two have $500. One has $400, and then I am now holding 3 trades, and you ask me why? Because I added an entry yesterday when I saw that gold was gaining strong momentum. Remember, you should always add to your winning trades instead of adding to your losing trades, and I just capitalized on that opportunity and added another trade to our initial 2 trades. Right now I'm going to hit and close 2 of these trades to secure some profits. Then I'm going to move my stop loss on the remaining trades to break, well, not even break even. Let me move it into profit, right? So I can lock in some of the gains. Now, remember, guys, once again, that loss from yesterday, it might have set you back a little bit. But it's a valuable learning experience. Keep pushing forward. You don't let a loss discourage you, especially after you cut out your losses short. You've done the right thing, right? You learn from those mistakes and you never stop improving your trading skills. So that's it on gold, guys. Now, as you can see, we've also just obliterated NASDAQ today with the whole inner circle. You know, the team is excited and we executed a really nice trade. You know, I'll be explaining it in detail in the next video. And it was a really incredibly interesting setup. Very simple, something that I would think a lot of people could have seen and caught, right? So make sure you stay tuned for that. Now, if you did enjoy this video, don't forget to hit that like button, turn on your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'll see you in the next lit video. Peace. Got tired of your shit,